When life gives you tomatoes at 300 rupees a kg, what do? You don't make soup, that's for sure. India's food inflation for July has touched new highs at 11.51%, compared to the much lower 4.55% in June and 6.69% last July. Fueled by the rising food prices, Consumer Price Index or CPI-based inflation rose sharply to 7.44% in July, considerably higher than 4.87% in June. This is the highest retail inflation since April 2022, when it was recorded at 7.79%. Meanwhile, as prices soared, growth in the Index of Industrial Production or IIP cooled to a 3-month low of 3.7% in June, from 5.2% in May, on the back of a high base effect and slowdown in manufacturing output, according to data released by the National Statistical Office. The IIP was 12.6% in June 2022. While infrastructure goods, electricity, and mining and consumer non-durables showed robust acceleration, growth in manufacturing and consumer durables deaccelerated. 14 of the 23 manufacturing sectors in the index, such as food products, beverages, tobacco, textiles, apparel, wood, paper products, and chemicals, registered a contraction in output growth during June. Add to this, the trade data released by the Commerce Ministry revealed that merchandise exports contracted for a sixth consecutive month in July by 15.9% year-on-year to $32.25 billion. Imports declined for a seventh month in a row by 17% to $52.9 billion, leading to a trade deficit of $20.7 billion.
The exports and imports decline is largely due to the price effect because the prices are lower than last year, but there is also quantum of exports is also slowing down because our export destinations are gradually beginning to slow down.
The major inflation upswing came mere days after the Reserve Bank of India's Monetary Policy Committee, or MPC, decided to keep the repo rate unchanged at 6.5%. RBI Governor Shaktikanta Das said that the MPC decided to keep the policy stance unchanged at withdrawal of accommodation, with the belief that prices are likely to come down soon. However, due to the increasing food prices, the MPC did raise the FY24 inflation projection to 5.4% from 5.1%. Households may be feeling the pinch of higher inflation, but India Inc. is enjoying record high margins and profits. The combined quarterly net profit of listed companies scaled a new high in the April-June 2023 quarter, owing to a sharp rise in operating and net profit. The combined quarterly net profit of 2,937 listed companies in the business standard sample reached a record high of 3.36 trillion rupees during Q1 of FY24, up 47.2% from 2.28 trillion rupees a year ago and 3.27 trillion rupees during the last quarter of FY23. The growth was led by the BFSI and auto sectors. So, are we seeing early signs of fresh headwinds for India? How do economists see the situation progressing? And how long might the stress last?
I don't think these are fresh headwinds since quite a few of these trends have been more or less expected. Because, for example, we knew that with the global economic slowdown, exports would also be slowing down. That's exactly what's happened. We have seen that the industrial production numbers have tended to be volatile, and this is not typically the time when we get high growth in industries. The only surprise factor has been inflation coming in at 7.4%. I would tend to think that since the problems are more on the food side rather than on the core side, there is some hope. A, there's going to be a statistical base effect which could bring down this number. And second, in terms of supplies coming in as and when the harvest comes through, there could be some kind of soothing of the inflation numbers. Right now, we've seen the prices coming down in certain markets. One is hoping that this will be more widespread and will bring down the rate, but that could take a month or two.
And what would be the immediate steps that the RBI and the government can take to prevent problems from multiplying?
I would tend to think that the government has done everything that can be done, because we should remember that when there is food inflation, I think food inflation cannot be dodged until the supplies increase. So what the government has done is they've taken several steps. You've tried to stop the export of cereals, that is rice this time, of non-basmati rice. You've tried to augment imports of pulses to make sure supplies are there. You've tried to put controls in terms of the stock limits, which hold for wholesalers as well as retailers. But these are measures which can only work to a certain extent. I think until the final harvest comes out for the next tomato crop or the next onion crop, I think prices will remain elevated.
Central bank is holding on to interest rates at these levels, and I think which is the right thing to do at this juncture. So government has taken a number of steps, I think, from banning of exports to importing more. They've also introduced stocking limits, etc. So I think clearly, unless I think the weather becomes a big problem, you have El Nino impacting the rice crop, and El Nino also impacting crops in other countries from where we import like edible oils, etc. So those are monitorables. We don't know what's going to play out there. But overall, I think the steps taken by the government are broadly in the right direction, and they are focused on reducing food inflation.
Experts believe, therefore, that the current macro trends are not too worrying and have largely kept to expectations. They also stress that both the RBI and the government have taken sufficient measures to curb the outcomes of inflation on other macro markers, and prices may soothe only with the next harvest.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.